A brand new year has kicked off, and already we're seeing swings in the major markets. So joining me without further ado is Alan Valdes of SilveBear Capital. Alan, Happy New Year, and thanks for joining me.
Happy New Year, and thanks for having me.
Well, of course, we're all waiting for the inauguration of the president-elect, and that is coming up in a matter of weeks. And we did get those Fed minutes earlier this week. So now that that event risk is out of the way, are you keeping an eye on any other indicators?
It seems, we got the one jobs number, ADP, yesterday. That was a little weaker than expected. We were looking for 170, I think. It came in like 150. And obviously today we're getting the real jobs number, and that looks to be a little weaker. We were averaging about 180,000 last year a month, and this number looks like it's coming in at about 170.
Well, Alan, of course, we'll be keeping an eye on the fundamentals, but everybody's also eyeing the Dow 20,000. Given Thursday's trading action, it doesn't look like we're reaching that level yet, but how important do you think that level is?
Well, this happens on all these milestones. If you go back to Dow 10,000, we got to that cusp so many times, and it's so frustrating, but of course we broke it. I think the same thing happens here. Yesterday's action was a little weaker. I think we'll see it by the election, but you just don't know. We're going to get past it. It's only a matter of not if, it's a matter of when. I thought we got last week, to be honest with you. But, we got 13 points away. Then early in the week, we were like 30 points away. So I've seen a lot of technical profit taking right now, also things of that nature happening for tax reasons this year instead of last year. So we're going to get there, but when it's anyone's guess, but I'm guessing it's going to be very soon. And how important is it? It's important as a milestone. For the market in general, it's not that important, but for that milestone to break it, when you looked at, we were at 10,000, and if you're looking back, and now we're closing in on 20,000 relatively fast, so that's why it's important. But otherwise, it has very little effect with the actual market itself.
And Alan, it's the beginning of a new year, so this is the time when people are looking at broader indicators, whether it be ETFs or other financial instruments. So are there any you're staying away from and any that look like a good opportunity?
Well, I think the market in general is going to be a good opportunity. I'm on the side that I think we're going to have a great year here. If you look at the bank's numbers that came out early in the week, they were basically all pretty good. Goldman had a banner year, as always. JP Morgan slid. But a lot of that's in trading, so there's a lot of trading going on. And I think if you get in an index fund this year, I think you'll see great returns by the end of the year. You know what it is? There's nowhere else to go. If you look at, say, Europe, our biggest trading partner, things over there are having trouble. You look at the Italian vote, you look at the BritX, you got the French voting in the spring. Things could change over there, and they are our biggest trading partner. So where's the safe haven? Here in the U.S. If you look at the 10-year bond, that used to be a metric on how the U.S. economy is doing. Now there's such an influx of European money coming into the 10-year that it's more of what's going on in Europe than what's going on in America. And it's keeping that bond under pressure. So overall, I think we're going to have a great year in America because there's nowhere else for money to go. And keep an eye on Asia. If they devaluate again, that could throw this whole thing into flux. So it's going to be an interesting year, but I think in general, U.S. stocks should be pretty good.
Well, Alan, thank you so much for insight as always, and have a happy and healthy start to the new year.
You too, Remy.